Thanks so much for joining us today here on America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Scott Kerschner and myself. My name is Chris Swan. Really do appreciate you spending part of your day, spending part of 2023 with us here on the show. Here's how you reach out, 419-794-3030. That's the phone number once again, 419-794-3030. Online, americasretirementheadquarters.com. On today's show, you probably update your cell phone every couple years, but how often do you update your estate plan now that the annual enrollment period has ended for Medicare? Do you still get a do-over? And if so, how does that work? A little bit of legislation that passed at the very end of 2022 that you may have missed, and how to get ready to retire. All this and more. But first, let me check in with the guys. Got a crowded house today. I have Nolan Baker, I have Scott Kerschner, and Mr. Chaz Price. So, gentlemen, glad to be with you all. How are you today?
We're doing great. Yeah, we've got the whole A-team lined up for today to kind of talk about getting things going for the new year and, of course, helping our listeners make smart financial decisions and plan ahead. So it's good to be here.
Glad to be on the show again, Chris, and glad to be sitting with you guys again.
Yeah, 2023 is over, and for those of you that can see, I've got the gray hair. I think that came from, in the beard here, I think that came from AEP. It was a tremendous AEP, but that's over and done with, so we're going to talk a little bit later in the show on OEP.
Exactly. So that's a little later on the show. But first, I want to talk about this. The Federal Reserve is actually expected to raise interest rates again on February 1st, but it appears the stock market's already trying to factor in when the Fed is going to begin to cut rates to reduce them. Here's former Fed Vice Chair Roger Ferguson on CNBC.
So I think there are probably 2, maybe 3 more moves by the Fed, 50 basis points in the February meeting, maybe 25 after that, and then probably they're done. But I think where the market is wrong is on the expectation of cutting. When we looked at the most recent summary of economic projections, there was no sign there of the Fed expecting to cut during this year. And when we listened to Jay Powell's press conference after the meeting, there is no sign of that either. So I think the market is ahead of itself based on the way the Fed sees things today.
And basically that means it's probably going to be even more volatility in 2023. So what are you guys telling investors for as far as their resolutions for this year goes financially?
Well, I think we've got some great steps for you. So first of all, what I would say is volatility creates opportunity. Again, it's all perspective on how you take a look at things. There's some great things I think to take a look at. Number one, with the increase in interest rates, a lot of the fixed traditional products that are out there, whether it's bank CDs or fixed annuities, I'm seeing rates I haven't seen this high in 20 years with how high rates are. I had somebody who had called up recently and wanted to make a deposit into an account and wanted a money market type fund to be able to deposit some money in. And I explained to them, the Schwab 7-day yield, now this is as of January 6th with waivers, the Schwab Value Advantage Money Fund currently has a 4.27% yield. So it's a place where I put my cash. And, if you're thinking about money that you have savings set aside and, money's not working for you, if you're not earning 4.27% in your savings account or money market account or your checking, and you have some money that you want to redirect, that's a perfect example of where there's opportunities. There's also a lot of opportunities, within the fixed space. But again, volatility, for me, I think as an investor, and I know we've done a lot of reviews towards the end of the year, and of course now here in the beginning of the year, it gets people a little nervous, and people aren't sure what to do. Is this the new norm? Or sometimes you hear people say, well, this time it's different. One of the things that we have done here at America's Retirement Headquarters is we've rolled out probably one of our most comprehensive educational plans over the next 6 months. And what I would tell you first and foremost to do is to get educated and jump aboard the process that we have. It's called the Retirement Journey. If you go over to our website, it's arhq.com. If you go over to the website, click on the events tab, and what you'll notice is that we have several great events that are coming up. First of all, we have a movie night. We're going to be talking about the danger zones, and we're briefly going to talk for 10, 15 minutes, going to be introducing kind of all of the different events that people can get involved in, and then we're going to show the number one movie of last year, which is the new Top Gun that came out, Maverick. We'd love to have you out if you're a listener of ours. Come on out to the Maumee Indoor Theater. We've got popcorn. We've got drinks and refreshments and candy. learn about the danger zones and learn about the other events that are coming up. Next month, we have our semi-annual economic update. At the semi-annual economic update, we'll be going over the journey through retirement. We also have a couple of educational events that we do at Bowling Green State University at the Levis Commons Perrysburg campus. We even have some dinner events. So education, we're certainly invested into you, our listeners, and our clients to help navigate this type of environment. But I guess when we look at volatility, guys, what would you say that you're experiencing, and what are some of the feedback that you're talking to people about as they build out their financial resolutions?
Yeah, Nolan, I really like the fact that we've got this educational lineup coming up here in the next couple of months, because it is definitely in need. There's just been a lot of confusing rhetoric out there. I mean, and particularly when you listen to the Fed speak, it's kind of almost like getting a history lesson in the 1970s. I mean, and then you hear them say, well, this is kind of a new environment. We're really in uncharted territory, yet they're still not really looking at the signs. As in the comment that they said earlier, there's no plans to really cut interest rates. So to me, that kind of sounds counterintuitive, that if we're in uncharted territory, you should really be looking at the data. So my takeaway to clients, what we've been talking about, is not to look too heavy, not to put too much emphasis on Fed speak or what you see on CNBC. Definitely want to be referring back to your financial plan and your retirement income plan, taking a look at, where are your sources of income coming from? Are they coming from the stock market, or are they coming from other reliable sources of income? So we've been having that conversation a lot. Also, making sure that you have enough cash to get you through the next couple of months, because I agree, we are going to go into a little bit of a more choppy period of time. Just because it's the new year doesn't mean that, we're getting a fresh start in the market. We're still kind of in the same market that we were before the end of the year. So making sure you have enough cash, not overreacting too much to Fed speak and what you hear on the news, and just kind of revisiting your financial plan and maybe upgrading quality and when there's opportunity.
Yeah, you really want to be long-term, goal-focused, plan-driven investor. Poor results are going to come from making short-term decisions. In my opinion, chaos is likely to continue in 2023. As Chaz just pointed out, just because the ball dropped on 12/31 doesn't mean the economy gets a restart. It's at the beginning of October that you've seen the market really come down pretty significantly. Here towards the beginning of January, going back to October 2021, the S&P is down about 27%. At the same time, though, it's all about perspective. So since the onset of the pandemic early in 2020, the overall markets were higher at the end of 2022. At the end of the 2019, the S&P was at about 38.39 versus 32.31. So that's a gain of still 19%. Not a great gain, but not bad considering the fact that the economic, financial, political, geopolitical world blew up over the last couple of years. And again, over that time frame, the market's still higher. So it's, again, about perspective. Specific ideas, again, ideas to increase protection. There's some great strategies that we can implement on some of the safe products that we work with. Some products offer bonuses to help get you back on track. We have some strategies within our Schwab platform that can help provide downside protection. And then for those of you that are looking to take advantage of the volatility for growth ideas, we focus on making sure that you own quality companies. And some of these companies, according to websites like Morningstar, are trading at a big discount. So turn volatility into opportunity. And again, the way that you can do that is we'll take a look at some different things and show you specific investments that we like in your portfolio if you're looking for a second set of opinion, and or go to the website and register for coming out to one of our upcoming events.
There's another opportunity for, like you said, Nolan, there's always opportunity. You can always look at the silver lining. There's opportunities in the darkest, gloomest times. But anybody out there that has an HSA account, an HSA is typically a money market account, right? And with the interest rates and the money market numbers that you were talking about with interest, anybody that's putting money into their HSA account, you're going to realize those gains from the 4% interest rates and things like that. So that's also another area which will carry over into your Medicare when you do turn 65 if you're not already. So you'll be able to use that money that's in that HSA account. It's tax-free dollars to help offset some of those expenses as well.
It's really easy to focus on the negatives, the likelihood of more market volatility, a possible recession coming this year. But if you can take a step back and see where the opportunities may lie to really, now would be a good time to really tighten up your retirement plan and maybe implement some of these strategies that the guys are talking about here. If you need help with that, well, good news. You don't have to go it alone. You probably shouldn't go it alone, honestly. America's Retirement Headquarters is here for you, here on the show, of course. You can give a call, schedule a time to speak with them at their office, 419-794-3030, or as Nolan pointed out, a lot of great educational events coming up here. You can go to arhq.com, click on the events tab, and go ahead and reserve your space. Again, that is at ARHQ or americasretirementheadquarters.com.